dollars, folks.
Hello everyone, this is Teddy Kex of Forex Trading Unlocked, and we are here on Tuesday night, March 2nd, for a live Forex analysis for you. We're going to do a little freestyle tonight. We have a couple questions from our chat rooms that we are going to answer tonight. So one is, we're going to talk about the US dollar TRY of all things. So here we go with our disclaimer real quick. Just to remind you that this webinar is for illustrative and educational purposes only. And also, if you have not done so, please subscribe to our YouTube or Twitch channel, Forex Trading Unlocked, or both, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Alright, with that, let's go to our live screen here. We have the Forex-Trading-Unlocked.com website pulled up. We have the home page up, and what we're going to do is we're going to jump to our nav bar here, go to the workstation page, and we're going to bypass all the numbers here. We don't care about that for tonight. And we're going to go to our first question of the evening. So we have the euro here. Let's go to the US dollar TRY. So the US dollar TRY, what is going on with this thing? Well, the thing is, this market has been, without a doubt, in a bull market on the monthly, the yearly, and the weekly. And except for, well, actually the weekly and the daily is kind of bottomed out over the past few months. But this is just a little corrective move here. As far as, it's kind of funny, the question is, what do you think about this? Well, the dollar is bearish for most individuals and most of the pundits out there. However, you have to think about, what's ironic is with the oil going to where it is right now, with interest rates where they're at, and the geopolitical spectrum, if you will, I think that it's going to be very hard to be very bearish on the US dollar TRY in the long run. However, we did get a sell signal here on the monthly. So this here was a Japanese candlestick pattern here. It's called a dark cloud cover, which was a short-term sell signal on the monthly, which is a long-term signal. So let's say that this signal is valid and we're going to actually be in a bearish move kind of way, looking for more downside action. So we'll go off of this last major swing low to our high right here.
We have had a solid turn.
Interestingly enough, we have the horizontal here line. We'll put here right around the 50%. Our swing low, which is a higher swing low, which keeps the trend intact. Remember, higher move high, higher move low, higher move high that we fell off of. This is still a corrective move. This is a higher swing low, and now we are higher. We're lower on the month so far in March, but this was a 50% retracement right here just from this move here. Now let's put the 0.618 as a little buffer zone here. Okay, so we'll take away this Fibonacci stuff. So we have a nice little monthly little outlook here as far as the US dollar TRY. Now, obviously last month we tagged the 50%. The 50% number is always, I don't care if you've been trading for a month or 50 years, anyone that's been trading for a long time knows the 50% rule. Does it happen all the time? Absolutely not. However, it is a very good gauge for corrections, and especially when they're corrections. If this market is going to maintain its bullish posture, which has been very steep, especially over the past couple years, and this market's very volatile, by the way. So anyone that trades this market, and it's a good question. I like the fact that we have a U.S. dollar Turkish lira trade. I'm interested in who actually asked me, and who it is on the chat, but I don't really know who the person is. But this is a market that if you do not have a good capital base, I highly suggest you don't trade it. When it trends, it's a monster. It's a beast when you're on the right side of it, but it's very volatile. The Turkish lira, just like the British pound, I always tell people, like, unless you have deep pockets and you really have a valid way of getting in and out as far as your buy and sell signals and your money management, it's just not for the average trader. It's just too volatile. The spread is pretty high between the bid and the ask to begin with. And when it moves, it moves. So we got the monthly here. It doesn't look like it's really moving too hard. However, we have this sell signal, which now has bottomed out like last month. So could that be it? Well, right now it's planted at a higher swing low. Higher move highs, higher swing lows. What is that indicative of? A higher moving bullish trend. So on the monthly, we're still there. Now let's go down to the weekly. All right, we can see how it came down into this 50% range. Interestingly enough, last week we had a nice little rally, very strong surge in the dollar. Obviously, this week, things are coming back a little bit in the Turkish lira. I would say that's most likely profit-taking. Now, however, the one thing you have to be mindful of is that on the yearly and monthly basis, obviously, it's in a bull market. On the hourly and the daily basis, not so much, especially with the weekly here. We've had established this high here. Higher move low, lower move high, lower move low that we're coming off of here. The question is, are we going to set a lower move high and fall back on support and maintain the short-term bearish trend, or are we going to rally? So let's take a look at this here. We got this little trend here. This is a pretty steep trend that was our corrective move, and then we have this breakout to the upside. So right now I would say that we're probably most likely in a buy dip scenario, especially because we have full divergence in the currency markets now this year in 2021. The coronavirus trade is off the table. Oil is definitely driving many currencies such as the British pound, the Canadian dollar, Australian dollar, New Zealand dollar. It's also hurting currencies like the Japanese yen, the euro, the Swiss. Then we have the 30-year Treasury bond in the United States, which has just completely fallen out of bed over the past couple months, let alone the past couple weeks. And that is a function of currency pricing. So as far as the U.S. dollar TRY, I think we've bottomed out around here. I would be an aggressive bull right here above this 6.871 area. Anything below here, I would be careful, because if we fall back through here, that means we will be making lower move lows after another lower move high, which is indicative of what? A bearish trend. So for the U.S. dollar, Turkish lira, I would leave it at that. So hopefully I answered your question here.
Pesos to 22 pesos to a dollar. I'm expecting that
on to the next. Okay, so we have this going on here, and let's see on Twitch. Do we have anybody new? Signing in, just checking the chat room here since we're doing this live little show here.
Back down to 20
let's go back to
below where it's trading at right now. So we've already reached our targets.
So we're going to go and now take a look at the dollar index. Okay, so we did our first question of the day, so now let's go to Dixie. So the dollar index, how did this thing fare today? Well, very interestingly enough,
but it really reversed gears the other
weekly. Let's go back to the daily. Today the dollar took a little bit of a hit. However, you have to realize that over the past few sessions, especially ending the month of February and moving into the month of May, we have really definitely made some aggressive moves to the upside for the dollar. Now, the irony of this all is that most of the other currencies sparked the move, and the British pound, which is the second biggest weight in the dollar index, was still making new highs against the dollar. And then, boom, it reversed gears in a big way, and like a balloon underwater, we had the dollar index pop. Now, the question is here, what are we going to do here? Now, we had a little reversal today, but don't get all crazy on that one, folks, because reality is we made a low here in January. It's the very beginning of the year, and we made a lower move high, a higher move low, a higher move high, and you could say we made a lower move low, but if we're going to do from this low here, this would be our higher move high with a higher move low. So I would be very, very cautious here, being too bearish the dollar right now. The main reason is that oil can keep on railing. That's not going to necessarily hurt the dollar. It's not going to help the dollar, but it won't hurt the dollar. The fact that the 30-year Treasury bond continues to buffer support, and considering the level it's at right now, and with the fact that oil is probably going to 100 and interest rates are going higher in the market rate, even though the central banks are going to stay next to zero, that's a big deal. And that's a big deal for the markets. It's going to cause a lot of volatility. It's going to cause a lot of swings in currencies. So let's go take a look at the euro US dollar. All right, we have nobody on YouTube with any questions. All right, cool. We're all clear with the questions right now, so we'll just keep on going with this free form here with the euro US dollar. We have the daily up. What do we have going on here? Well, we had a nice little sell signal that had occurred a few sessions back. Tonight you can see that we are a little bit lower after rebounding today. Interestingly enough, we set a higher move high and a lower move low. So what does that mean? Well, besides the fact that we have a sell signal already in place, we have this low, or that high rather, excuse me, and this low that are key levels to watch. As far as the upside, any rally above $1.2242 definitely has us back on the bullish campaign. However, if the bearish trend is to continue with lower move lows and lower move highs, then we most likely will stay below this downward sloping trend line here and not even make a challenge of $1.2242. Should we fall back and take out this $1.1995, that will have us coming to test this low right here. This is the big deal. If we take out this low over here, right around $1.1953, that is sayonara. Look out. We have definitely confirmed a new bearish trend in the euro US dollar. Right now we're looking at a corrective phase. Because of oil is going to hurt the euro. It's not going to hurt the pound. British pound actually will gain strength because of higher oil prices. The British pound will also gain strength as the euro continues to fall under pressure due to all of the domestic issues it must deal with. You got to remember that the euro and the pound are the two biggest weights in the dollar index. When the EU still had the UK in it pre-Brexit, that meant that the two biggest weights in the dollar index were not necessarily totally working as one, but they were much more in sync, meaning that they had a lot more of the same agendas, and also the same things influenced them, like the fact that Germany has to bail out the EU now without the help of the UK. That weighs on the euro. And if you want to learn how to trade those Japanese candlestick patterns that we were where do we go from there? We look at the Swiss. US dollar CHF. This market continues to rally. Yesterday, it spiked higher, settled lower. Actually, well, today, Tuesday, now we're Tuesday evening. This is really Wednesday's trade. But look at what's happening here. Higher move highs, higher move lows on a daily basis, on an hourly basis. This is a flight to quality currency in the European Union, also in the Euro trading zone, and also globally. Remember, there's three flight to quality currencies: the Swiss, the yen, and the US dollar. If the Swiss is falling to the US dollar, that means US dollar strength is there. Because of the oil trade, this is also hurting the Swiss. Because of the interest rate trade, this is hurting the Swiss. Now, this is for the euro and the Swiss because of all the issues that are going on in the euro. Now, this trend is most likely going to keep on continuing further, pressing through resistance. However, the Swiss, I wouldn't expect any major moves. I think you're going to start to run into trouble around 92.5 to 93 cents. Once we get up to there, I would expect a nice correction like you've seen here. So don't expect this to keep completely going vertical. However, the US dollar most likely, as long as oil, especially if oil gets another big surge, And if the US 30-year gets another big break, then we're most likely going to see the US dollar Swiss get a big rally.
You can either buy it or you can share it.
Now, British pound,
preview it and check it
US
out.
dollar.
And then at the bottom,
what do we have going on here?
Also join our
I'll tell you what.
list and subscribe to that.
We have the first decent correction in months is what we have going on here, and it may be just very short-lived.
So,
like I said, we have the oil trade. Excuse me. So we had a sell signal here. This is a bearish engulfing line. As far as hitting our short-term support targets, it already did that. It actually came a little bit through it today. Does that mean that this is done for the slide? Well, this is a tough one. Normally, with this sell signal here, this would be a layup to take. However, because of the oil trade, it's hard to do that with the British pound. The British pound is also no longer part of the EU. One of the reasons that the pound has been rallying, especially into this new year or after the new year, is the fact that it's done. We're in post-Brexit. One of the biggest lifts in the pound is post-Brexit. It's making the pound very strong. Does that mean that that's a good thing or a bad thing? Well, I would say for the UK, it's for investors that are long the pound. Yeah, it's good. And as far as exports, they really don't have to worry about that. So for imports, it helps them. So it probably, in the midst of the coronavirus and lockdowns, it's not hurting their economy being a strong currency. Usually you want your currency to be weaker because of your exports, but even though oil is big for them, and it's an export. It's not really an export because they have oil drilling all around the world. So if it was just off the coast of the UK, then it would be a different story, but their interests are global. So that's where the currency gets a lift in that one, where most currencies would not normally get that. So I'd be really cautious here. Being a bear, definitely. And see, here's the thing is, the risk level is high now. This is your risk. If you're short, from here, if you got even short back when this sell signal happened, $1.4247 is your risk. That's a lot of heat you have to take. If you're wrong on this one, and you're also, it's a counter trend trade. Remember, on the monthly, the weekly, the daily, the hourly, up until the sell signal, this currency is a bull. Plus, like I said, you have the oil trade. Now, the interest rate trade, which is definitely helping the dollar against all the currencies, is not strong enough to outweigh the oil trade when it comes to this. So whereas the euro and the Swiss may continue to fall versus the dollar, the pound may only just have a slight correction like it did here and then continue to go higher. So this trade here, even though we had a signal, if you read the book High Probable Japanese Candlestick Patterns, you can find out where the actual targets were and the extended targets were. But for the risk-reward ratio, it's off the table. And we actually have instructions in the book about how just because you have a signal doesn't mean you take it. There are certain rules that will overrule you going in and taking it. Like, it's not about subjectivity, it's about common sense. Any counter-trend trade has different rules than you do with the trend. If the signal, for instance, had this been a correction, there was a bullish engulfing line to the upside, bullish meaning, that would be in a buy signal. That's a totally different story. In that case, because it's with the trend, absolutely, and especially with oil being where it's at and in a bull market and what have you, that would also just be like, hey, we have a boost to our buy. So for the pound US dollar, it's hard to be a seller. I would be cautious because the euro and the Swiss could tank against the dollar right now and continue to do so for the next couple weeks, and over the next couple days we could have the pound like a balloon underwater, taking out new highs and being above 142.47. Remember, when the pound moves, it moves. It's a big currency, and that's kind of how it was interesting to start out with the US dollar TRY, because I always equate the pound and the TRY as very similar currencies. It's just the pound is obviously the second biggest weight in the dollar index and a much bigger currency, but it's wild and woolly, and you need to be very capitalized and very rational in your expectations of when you do and don't take a trade with the pound. All right, let's move on to the Asian trade zone and start off with the US dollar JPY. So like the Swiss, the US dollar is gaining on this other flight to quality, strong currency. Remember, we have 3 trading zones. We have the North and South American trading zone, we have the European trading zone, and then we have the Asian trading zone. The US dollar, Japanese yen, obviously being the big one in the Asian trading zone. This one here has been in a rally since the beginning of the year, just like the Swiss. And this is where I tell people, like, when it comes to dollar strength, like, there's all these dollar bears out there. I said this going into the year. You can check our old videos, folks. Believe me, it's out there. That we were encountering divergence, and especially with the new transition of power in the U.S. and the outlook as far as oil, it was a no-brainer. And the fact is that because oil has moved up like it has and interest rates have confirmed the market's view of what's going on right now in the United States, well, this impacts currencies. And it definitely impacts the yen, the Swiss, and certain other currencies. Because of the oil rally, the pound is going to stay strong, so will the Australian dollar, New Zealand dollar, and the Canadian dollar. However, the Japanese yen is getting crushed by this. Right now, we are hovering below 107. We have an upside target of 107.5 to 108 even. When we broke out to the upside last week, we were figuring that it would probably take about a good 2 to 3 weeks to hit that 107.5 area. I don't know if we have another big rally. Remember, it's rollover for both the financials and the commodities coming up over the next week or two. Over the next 2 to 3 weeks. That's big for what's going on, because as we have this rollover, spreads are in the futures contracts are rolling. And as far as being bullish and bearish, I would say that the bullish dollar versus the yen, the bullish oil also versus the dollar is going to be there in a big way. Now, by the way, looking at this US dollar yen trade, something that supports it, when you go to our forex-trading-unlock.com website, you know, like I said, we have the workstation page. We're going to pull up the gold market. Why are we going to pull up the gold market? Well, I'll tell you why we're going to pull up the gold market. Because XAU-USD also has a lot to do with the yen. So the gold market spiked and made a lower move low today. Rallied, settled higher, and now tonight it's back on, not necessarily its lows, but it's definitely negative on the trading session for Wednesday. Very like this, only in reverse. US dollar is the opposite chart of the gold US dollar. Now, does that mean that they are always in tandem? Absolutely not. However, excuse me, with I gotta have a sip of water. So that low right there, and we're gonna take this trend. Dehydrated, it's so dry in here. As you can see, can't wait till springtime's coming and the windows open again. All right, so we have the U.S. dollar and JPY here, pushing new highs. Like I said, 107.5 to 108 even is our upside target. With gold continuing to ride its lows, interest rates continuing to ride its lows, meaning going higher for the 30-year. And especially with oil hovering below its highs, this market is in a buy dip scenario. So if we have any correction, it'll probably be like these last two that we saw during February, or had seen, excuse me, to be proper with that. Now the trend here is pretty vertical over the last week and a half, but overall, it's not too steep, and like because of the commodity pressure, and especially what's happened just in the past month. I mean, we've had the explosion in oil, gas, natural gas, heating oil across the board, all the energies. That is really, really driving this trade. So bull market, looking for a break to buy, pressing new highs. Australian dollar, US dollar, interestingly enough, we had a sell signal right here, bearish engulfing line, boom, and it hit it within 2 days. Our target came just a little bit below it. What's it going to do now? Well, that's a good question. This thing is a raging bull on the monthly, the weekly, well, obviously not the daily in the past over the past week, but I think it's more of a corrective move. It's really hard to sell this market. I would say key off of the high where our sell signal came in. anything above 80, even basically 80.05, whatever, 80.03, just a couple pips above that. That would be a big breakout to the upside. Do not fade it. I wouldn't say it's going to explode. However, it would confirm newer highs, and the trend is obviously would be intact. We're coming off a higher move high. Have we established a lower move low? Well, we don't know yet. Right now, we've been rallying for a couple days. If we fall below here, then that would extend our sell signal towards its second target, which, because of oil and the whole commodity trade, it's really hard to be a bear. This is a counter trend trade. If you read the book High Probable Japanese Candlestick Patterns, we talk about giving yourself the best odds in trades. When you are making higher move highs and higher move lows, you're in an upward trending market. You want to look for corrections to buy into the trend and look for a better place to buy in and ride the next wave up. You never want to try and call a top. Just like you don't want to try and call a bottom. Obviously, eventually doing that kind of methodology on a swing basis, you will hit the loser. However, if you are riding the trend, and there is a long trend, you'll be riding it for a long time, and that's how your big money is made, is by maintaining trades within the trend. Counter trend trades, you really have to be disciplined with your risk management. I'm not saying not to do them. However, you need to be aware of the fact that trend trades give you your biggest odds, and especially when you use high probable Japanese candlestick patterns or other signals that are very viable, that helps to increase your ability to capitalize on those movements to the upside or the downside, whichever they may happen to be. And you can also do that besides just the outright Forex market. You can do it in the futures, the options markets, the stock markets, the other option markets, binary option markets, and take advantage of these moves, ETF markets, what have you. You can do that in all different types of markets, even Bitcoin. Just take that into account. Be mindful of that for sure. This one right here, I'd be very cautious as far as trying to become a bear. Okay, so just because of the oil trade. New Zealand dollar, US dollar. Let's see what's going on here. Very similar to the Australian dollar, US dollar trade. I would say the same thing here. Capped off at the high recently where we had a sell signal. Interestingly enough, actually, let's go back to Australian dollar, US dollar.
Like I said, oil.
Okay, so we made this high here. Sell signal, 2-day trade, we bounced. Then we have the New Zealand dollar, US dollar. Interesting enough, 2-day trade bounced, but yet today spiked lower, well actually Tuesday, and then came back and now is higher. So this one here had made a higher move high, a higher move low, a higher move or lower move high, a lower move low, and then now is bouncing up. Does that mean it's indecision? I don't know. Remember, Australian dollar is much stronger currency than New Zealand. It's also influenced with the Chinese economy a little bit more. New Zealand dollar is more global, so this one may be they don't trade completely in tandem right now. They are very reflectionary, and I think that's why you're seeing this right now. Those who trade New Zealand dollar or the Aussie always do watch these, or should, just because it's important to know if one is starting to make a move and why. They do have very similar bases for their economy, for what drives them as far as raw commodities and some other things like that. So where this one is now there could be divergence. Who knows? This one actually might start to fall, cripple to the dollar, if you will, in the short run, or maybe it's getting ready to start to set a range. And I think that's what you may see with both the New Zealand dollar and the Australian dollar, especially if oil starts to, I wouldn't say stabilize, but stop railing as strongly as it is, especially because we have such a surplus on the market. It's odd that it's such a runaway freight train. But we'll see. Who knows? The market is always forward thinking. So now let's look at the US dollar, Mexican peso. I have friends going down to
the low that was planted
various places in Mexico at the end of March, heading into April, chasing after those spring breakers with their families. And it's interesting how the U.S. dollar Mexican peso has continued to make higher move highs and higher move lows. Today it is slightly higher this evening. Yesterday, Tuesday, it made a higher move low. This one I would be very hard pressed to sell. I'd be looking more, if if you could possibly buy it again a little bit lower, but odds are the peso is going to stay somewhere between this last low, this major low here around 19.5, excuse me, just below 20 pesos to the dollar, and I think it's got a good chance of running up to about 21.20 to 21.5 pesos to the dollar yet. Bull trend's a little steep, but I think that since we're coming off a major bear trend, and also the fact that we're coming into spring break season and what have you, that the peso might end up having just a little bit of a fall against the dollar. That's just my little guess right now. We are out of signals. We're waiting for either another confirmation, a continuation trend to the upside, or a valid sell signal. But right now, it is what it is. It's extended through where we already had our price targets, so we have to wait on this. U.S. dollar Canada. Well, oil is definitely helping to keep this bear towards the bottom. This market has been talk about just a slow grinding bear versus the dollar, no matter what has happened this year or over the past year. The U.S. dollar Canada, since last February, March, has just been on the campaign to slowly fall against the dollar. And it was doing so in a big way going into 2021, and then with the confirmation of the election and the passing of the torch, and knowing that the oil industry is under siege, oil prices going higher, that just really helped to slam a lower move low in the U.S. dollar Canada a week ago. We had a bullish engulfing sign reversal that turned this market around. We already hit our first upside target. Our extended target is right below this last higher lower move high. If we were to take out this area here, 128.86, I wouldn't say I would be bullish. I'd be neutral to looking for a very wide range trade to possibly be established, or looking for the next wave for a major sell-off, especially if oil continues to rally. We'll see on that one. It looks like, not that it's stabilizing, but I think maybe over the course of the next week or two, we'll probably see that oil will stay neutral to higher, but not necessarily too strong. I hope that is the case. If not, then the U.S. dollar, Canadian dollar will not be even coming close to this $28.86 for, I would say, the odds are very hard pressed against it getting above there anytime soon. In fact, if anything, if oil really starts to explode to the upside, I would look at the U.S. dollar Canada going to make newer move lows, which would lock in a lower move high here, and once again solidifying the downward bearish trend. All right, let's see. Do we have any questions on YouTube? No questions on Twitch. Doesn't look like it. Okay. All right. Let's go back to the euro, U.S. dollar, and see where we're at here.
To the upside.
Euro, U.S. dollar. Okay. So once again, very quiet this evening. We know our pivot points. We know where we're at. So check it out.
The dollar may not be
the evening trade right now in the U.S. is obviously always pretty much dead unless Asia kicks up its gears. Asia's pretty quiet. Euros doesn't come. The European markets don't come online for another 5 hours really. So we'll see what happens here. Right now we sparked this little low here. We'll see how it manifests over the course of the next few hours. Right now, I would say take a break and don't expect very much, at least until about 2 in the morning. So that's another, let's see, 9:30, so that'd be 3, 4, 5, 4.5 to 5.5 hours. We can probably expect to see something start to change around here. So once again, I want to thank you very much for your time with us. And please subscribe to our YouTube channel, Forex Trading Unlocked, and check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And always make sure you go to forex-trading-unlocked.com for all your Forex information and needs. And also check out our streaming videos, even from our home page.